Well, hello folks, I'm L.A. Little and this is your daily TA wrap, where we talk about these markets and we look at them from a neoclassical perspective each night, asking ourselves what happened today and what does it tell us about the coming ones. I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the beautiful Rocky Mountains. Folks, if you want to ask questions tonight, you can send an email to support@TA Today, or you can text me 912-911-0 area code 303. Either of those, I'll try to pick it up and answer whatever questions you may have. Of course, you can always type something into the chat room there. I'll pick that up as well. As far as what happened today, well, finally, they take a little break. Dow was down about 101 points, 0.5% basically. The S&P's down about the same, about 9 points. We had the composite down 0.75% at 4,100. The NDX about 0.5%. So you can see the moves weren't that big, except for the Russell. Yesterday the Russell was the big loser. Today it's the big loser again, down about 18 points, 1.5%. 1103. So let's start with that Russell because that is the main guy. Oh, what did we do here? Messed up something. Okay, well, let's look at it a different way. And that just happened. I was doing something with the database and it looks like I screwed it up. So let's do this. Let's go to a different set of charts, given my mess up, and then I'll have to get these fixed. We'll use the Russell over here. The volume was lighter again today as we pulled back. So as we came back down, volume shrinks. We're coming into this low. That low is 1102. We're at 1103. And as we push into that area, volume's not there. And that's the case here. It's the case in all of them. You can see it here on the IWM more clearly. So we pull the IWM up, 65, you're coming back into, and this is the heaviest one, 65 coming back into 66, coming into this low, which is 76. It doesn't look like the volume's going to be there, probably going to get some sort of a bounce out of this as a result of it, but clearly the Russell has gone and done what it has been doing, and that is that each time it comes back up, and in this case it was this bar, it comes back up, it does a retest, and what? It regenerates back down the back side, and that's what's been happening all the way down on this Russell. Now, a lot of folks are watching the 200-day moving average. I don't know exactly where it comes in. It's somewhere, somewhere in this area. The Russell keeps playing with it each time. I don't know that the 200 means a lot other than the fact that other people watch it. What really means a lot is, can it take out these lows, in particular this one? And the reason this one is so important is because it's on multiple time frames. And if you pop over and you look at the weekly chart, and we can do it here and just pull this to a weekly, you're going to see there's multiple swing points down here on the weekly. And actually it'll be easier to see that over here. So if we go to the weekly chart, you can see the multiple swing points down at these lows. There's 3 of them here. Each of them, as we're coming into them, we're coming into an area where if it breaks, and this is the first one, and that price point here on the IWM is 109.32, and that's the key price point. 108.66 is the daily. The daily is the one that has the most volume on it from a weekly standpoint. And this is Wednesday, so let's actually do the calculation for the week. We're far enough along here. So 204, divide that by 3 is about 70. 70 times 5 is about 350, going into 339. So you can see the volume is going to be just about as heavy on the weekly as it was at that prior low. And it's definitely heavier than it was on all these other swing lows. So a big week shaping up. It has, the market, in my opinion, the Russell has to hold this week. If it closes underneath that swing point low and breaks this low and does it on a weekly with expanded volume, folks, this market's going to try to push down. Even with the European situation, which now has put a put, so to speak, on the markets, and what I mean by a put is Draghi is basically, it's already penciled in that they're going to do a 0.25% rate cut. The question is are they going to do more in the way of QE and some of these other things? And if they are, how much and how big? Because every time any country has come out and done QE, any of these large countries, and in this case all of Europe, it has put a floor under the markets and sent them back the other way. And so, if the Russell starts to break down, and now the Russell is not nearly as affected by that as other indexes, but if the Russell starts to break down, and I say that because the Russell is more domestic, right? It's just not big cap international exposure. So if the Russell starts to break down, we will get some sort of a pullback here in spite of what's happening in Europe. Let's pop over and I'll pop into these that we have volume on so we can look at them as a SPY. Put it on a daily. And on here you can see the volume. I'm not going to be able to do it here. I screwed up my database. Going to have to fix that when I get off the air. All right, let me go back over here. Let me go and we'll use this. So if we go here on the SPY, put it on a daily, and pull it in, you can see the SPY's coming back, 65 million. I'm on the IWM. Let me pop to the SPY because there was a lot less volume today. There was no volume coming back. Here we go, 72. So we're coming back with 72, right? That high we went over, remember this was a suspect breakout. The high we went over, 189.70. Volume there 169. You're coming back with 72. You're also coming back into this bar, which was a high that was broken. And when you're coming into both of those, right, there's just no volume. Again, that looks to me like you're going to see some sort of a whole bounce attempt. And the key to me is going to be the next day or two, because as we push back up here, we already had a gravestone doji here, right? Those usually are kind of deadly at the tops. And not usually. Those can be deadly at the tops if they don't get taken out. So as we pop back up tomorrow, if in fact that's what happens, if we get some sort of a rally, I think we'll see some pressure in the morning, but get some sort of rally during the day, and you come back up here and you try to take out that high again and get back into this bar. If it can't do it, and this is the strongest of the indexes, then it's going to be a real issue. You got ABCD structures on the way up. They've got another, on the S&P, they got another 20 points or so to go to the upside if they want to play out. But right now, these markets are struggling. They're struggling to get higher. We thought they would struggle to get higher. It looked to me, and it still looks to me like there's an ABCD structure here. It still looks like that European situation is going to try to lift this thing up. But it's going to be a chore. And it's a chore because the breadth of the market is so narrow. I track all of the stocks in terms of their trends and look to see which way we're expanding, which way we're shrinking. Well, we're expanding to the top side. And that expansion to the top side in terms of top side is probably not a good term. The expansion of the number of stock trends that are bearish on a short-term time frame, right? That's increasing, is continuing to increase. It hasn't stopped, even with these markets making new highs. That, to me, is probably the most negative thing that's out there. Doesn't mean it can't change, but right now, that's pretty negative. And that's another way of looking at breadth. And in this way, looking at qualified trends. The Nasdaq looks pretty much like the SPY. We can put up the composite here. This one also comes back today. Again, if we look at like the NDX in terms of the Qs, the volume wasn't there, right? Very slow day as it comes back. Unless we get some volume pickup, I don't see how this crashes back down. The IWM is the only one that has the volume, and it's the only one, as you see, really losing points. If we pop over and we look at some of these sectors, let's look at these together. Let me pull this in tighter so we can see them. So here's the IYT. So it makes a nice push up coming back. Now the ones that are broken over, they're going to be doing retest regens as they come back, and that will be another measure that we can watch. So the retest regen would be here on the IYT. The semiconductors, if we look at those, let's pull up the semis, and they're coming back in. Now they never made over the high. They failed at that breakdown bar, and they're coming in pretty hard. Their test on the way back will be here as they come into this low. So this area here, that's the semis. So the semis are not going to help that much. Looks like they're going to come in a little bit deeper. But one thing you have to notice with all these, there is no volume. I mean, it's almost like, you know, it's not as if people are selling. It's just nobody wants to buy. And nobody buying is allowing the pressure to come back in. Just like sometimes we see nobody willing to sell, and the price just kind of creeps up to force sellers to come in. Let's keep going through these. XLB was trying to make new highs today, and that came off again today. Still had more volume, so I expect that will probably try to continue. XLE was trying to fail. I think it actually did. That top was 95.09. We got to 95.02. Didn't get there. No volume. It may try to test again tomorrow because it had slightly more volume today than yesterday. So maybe one more test of that top. But the XLE, you know, to me is in some sort of a sideways range, and it's just a question of how far it wants to come back. XLF also back underneath that breakdown bar. So here's your breakdown bar, and it's right here, and that's not good. Right, you're back underneath it. You had no volume, you go over it, you can't hold it, you're back underneath it. This reminds me of what we saw with the XLK for a while. Speaking of the XLK, let's pop into it. So the XLK, it failed yesterday at the top, at the last of the two breakdown bars. So there was two. It was struggling with this one, if you remember. Finally got over it, right? Nice push over it, no volume, but a push over it. Come back today, no volume. Coming into this high, no volume there. This can actually trade back to that area, but it did fail up here yesterday and got that pullback off of it today, which makes sense. XL, so a little bit more pressure maybe here. Let's see, what are the others? XLV. That one's still holding over the breakdown bar. XLY. That one failed yesterday and it's back under it again. So this was a failure. It was a failure of multiple things. Remember, it was a failure here. It was a failure of swing point highs as well. It comes back, and I would think this one trades all the way down. So XLK, a little bit more pressure. XLY wants to come deeper. XLF, back underneath the bar, probably comes deeper. So those four in the XL, was the other one? XLV is still over. So three of the four want to come back in some more. XLK, XLV, not too bad. The other two more. So still weakness in those key areas, and that hasn't changed. Let me see. So bonds spiked up today. They got over that high, 103.10, and they close it at, let me see, that top was 113.10. They close it at 112.96, less volume. Yeah, that also says that we should try to push back up. So you test the top. Remember, high volume at the top. You hit it, less volume. That probably is going to fail, come back. These are in a range trade now. I expect that range probably expands a little bit on the way back. These are the big bars on the way back. So you came into this area, you held, you bounce up the first time, you go up, you test, you fail. That should bring it back, and I would think it brings it in a little bit deeper back into these bars. So the TLT, nice big spike up, but I don't know that it's going to get much more out of it. It's probably going to come back, and if so, that probably is positive for equities. Gold spikes up, and not much volume on it, not really telling me much either, so nothing really there from gold. How about silver? Silver was also spiking. Both of these spike up, but just doesn't look like they have much. Maybe they'll fool us and they'll get some volume in here, but right now these are just range trades. If you're playing these things, you have to be playing the range. And there was a prior range up here. Now you got one below it. A little bit of an overlap. It's in the overlap area. We'll see if it can push up, but it doesn't look like it has any juice to it. Let's see what the dollar's doing real quick. And that one's still holding up there. So dollar's still pressing higher. And I'm going to pop to this and put it on a weekly because I want to see what the foreign markets look like. Let's see here, HSI, so the Asian market. And so volume is not that heavy, but not bad on a weekly. So Asia doesn't look too bad. The one that probably still looks bad is the Nikkei. And that one really can't get going. It's testing this high on a weekly. Yeah, Nikkei doesn't look like it can go very much. How about the, the ones that are trying to move are Europe, because European stocks, that's 2.6, maybe 7, 8, roughly 9 times 5 is 450. On a weekly, they just don't have quite the volume. So they're probably range trading, from a weekly perspective. Now, if they can get over the highs, they can push a new range, right? And that new range would be about an equidistant of these. They got to get over the highs, though, and this is the DAX, and the DAX is probably going to be the strongest one because it stands to benefit the most from the easing. And the Bundesbank is more or less endorsed it now, so I suspect it's going to happen. If the S&Ps are going to bounce, it's going to be a result of piggybacking what's happening in Europe. So if you want to watch something, watch Europe. That's where the story's going to be. Okay, let's let's take a look at whatever you have that you want to look at, and then I'll come back and fill in on anything else. Let's see what we got here. Federico CLMS. This is your favorite stock now. Let's see what we're doing there. Okay, so it came back today and it tested back in there, and let's see. This is what we were talking about last night. So it comes back 140, comes back with 118. Yeah, looks like that was the buy today. That's what we were talking about, right? We were talking about it coming back into this area and not being able to break it down and not having the volume. So yeah, I think this is going to try to make a run now. So now you have the potential ABCD structure on your daily chart. So in this particular case, it's to here, back, and back up, and it looks like it's going to make an attack on this area. So yeah, it looks like today was the buy back on underneath this and held. So it looks good. Let's see what the next one is. EEM. Let's see what EEM looks like. So EEM is the emerging markets, and they've had some pretty good push. India's had huge runs, and now with China starting to kick in, it's also putting some nice runs in. Okay, so this one's had multiple ABCD structures as it broke out over these highs. And my chart may look a little bit different because this has a dividend. But let's look at the ABCDs. So you had one here, and then you had another one actually right there on the end of that one that presses up. It looks like you just finished it. So I would think you're going to get some sort of an attempt to pull back and do a retest regen. And let me quickly, just because this is, and I won't be able to see this clearly, but just because the that high was 42.47. Let me get rid of this so I can see. 42.47. Yeah, that is it. So it is over it. So yeah, it's the retest regen when it does come back will be here, and it depends on whether it stays over 6 bars or not. Right now there's no sign other than the fact that you have an ABCD structure that just finished. Right? There's no sign of a pullback yet. Right? There's an ABCD structure here and it just went over it and finished it. So, you know, if it wants to pull back, it could do a retest all the way back to here. If it comes back within 6 bars, they really like to do that. They like to come back that deep. If it holds up here, you know, for 4 or 5 more bars, then you'll just get the top test usually. So it looks good. There's no sign of failure yet, but you've got extension on your ABCD structure, so it may have already done its run. I noticed if, next one, I noticed if I change time frames intraday from say 30 to a 15-minute, a buy bar can change to a sell bar, if you know what I mean. Well, yeah, sure. So the question is, how can you trade using your method if it does this? Well, that's a good question. I think what you do is, and it sounds like you're talking about intraday because you're talking about 30, 15 minutes. You know, when I'm trading intraday, I'm watching 3 charts, and I'm usually trading off futures charts. And what I'm watching is I'm watching 30 minutes, and I'm using, you know, I always try to have 60 bars to a chart. And so I'm using 30 minutes for my quote-unquote long-term time frame. I'm using, I think it's 10 minutes. Is it 10? Here, I can tell you. Hang on just a second. I'm pretty sure it's 10-minute charts for my... No, 15. So I use 15-minute charts for 2 days, which gives me about 60 bars. And then I use a 5-minute chart for my short term. And when I use those, I'm always looking at all 3. And so what I'm really trying to do is I'm trying to line up what's happening across multiple time frames. And that's what you should always be doing no matter what your time frames are in terms of, you know, length. You're really watching the bars. And so if I'm doing short-term trades, you know, I'm going to be using my 5-minute bar as my entry, you know, mechanism in terms of timing because it's much more close to the action, so to speak. And then I'm using those other 2 to line up ABCD structures, to line up breaks, to line up retest, regens, that sort of stuff. And so if you put those 3 together and you do that, you know, then you're going to be a lot less likely to do exactly what you're asking, and that is I look on a 30, right, and it looks like a sell or a buy, and I look on a 15 and it looks like the opposite. Well, when it is the opposite, that tells you, you know, on those longer term time frames, that's telling you that there is a mix of action, and more than likely you're going to see the thing bouncing up and down. It's going to be some sort of a range that's taking place because they're not incongruent, right, both pointing the same direction. It's only when they're both pointing the same direction and have room to run that you can get those larger moves usually. And so when you ask me that question, hopefully that gives you a sense of how you use this to make those kinds of decisions. Okay, next one. Will the BGH hold support or coming back? Let's see, BGH. Global Capital Short Duration High Yield. Let me see what the weekly looks like. Okay, so on the weekly, you got some real good spikes at 24.16, 23.95. If I go back to the daily, it depends. It depends. Well, first of all, you have a swing point low here. And, you know, it could certainly come down, break that swing point low, and set up some sort of an ABCD structure to get you deeper, right, in terms of this structure. That would get you down into here. But even if it does that, it's just going to bring you into, like, the 24 area, right? So if we go back now and we flip back to the weekly one more time, that 24 area, the 2 big heavy volume bars here, is at that 24 area, right? The congruence of these 2, in other words, if I take these 2 and I say, okay, where do they cross? Well, where is it? It's right at 24. So I think you could get into that bar, into this bar on the weekly, and that top is 24 roughly, 23.95. So you have support really from 23.95 to about 24.15. I think you can get into there. I think you're probably going to hold. We've got 270 on a weekly. That would be 90 4 times would be 360 into those, or that's 540, 550 twice. So I don't think you're going to break it out. It doesn't look like it. Okay, I'm about out of time here, so let me just take a second to kind of summarize. We had some pressure today, especially in the small caps. Small caps been trying to lead us down for a while. That hasn't changed, right? If I pull that weekly chart over again on the small caps, you can see the swing points are down there. This thing is trying to make a run lower. It's trying to break lower, but it's taking time. And it looks to me like it's going to continue to take time. It doesn't look like it's quite ready. It doesn't have quite the volume yet, but when it does break, it's going to be a big push. As long as it doesn't trade higher, eventually this thing looks like it wants to break lower. In the meantime, we've got the European situation that's really putting the backstop on Europe, and we're piggybacking that with our large cap stocks. That can go on for a while longer. That news is not going to hit for another 2 weeks. Matter of fact, time-wise, it's roughly 3 weeks from now, right? Because it's the first Thursday of the month, which is about 3 weeks away. So this can go on for another 2 or 3 weeks. I don't know if it will. The other possibility, though, is that we break, right, on the daily, on the weekly, and we actually get a flush here, and then we rally into the ECB. It can go either way. Tomorrow, looks to me like we're going to try to bounce tomorrow. But after that, it's not clear, and I do think where we end this week is going to have a lot to do with where we go the next 2 weeks. Either range trading, trying to struggle higher, or getting some sort of a flush in front of the ECB and then a rally into it. That's the way it looks to me. I appreciate you being there. You tell a friend, tell two. I'm LA. This is, and it was, your daily TA wrap. Have a great night, folks. Take care of yourself. I'll see you next time. Until then, good night.